Changing banking environment in the UK, the proposals to ring-fence retail operations from investment banking activity, whether that could complicate this going through?
Well, we know the UK business is doing it tough, and the market knows this. It's already priced it into NAB's share price. We know the Yorkshire as well as the Clydesdale brands have been a big drag on NAB's share price, but now it's priced into the market. And if we do see a selling of these brands, I think what we will see is a re-rating of NAB, and that's really what the market is watching for. If we do see a price tag around the £1.5 to £2 billion mark, then what we will see is a release of capital to shareholders and a re-rating of NAB stock, which would be a positive. We've known about the Yorkshire and Clydesdale problems for a number of years now. We've seen write-downs related to that. NAB trying to distance itself from its UK operations. If we do see a buyer coming on board and a release of capital, then that would be a positive re-rating for the share price. NAB, of course, in terms of pricing, is the lowest out of its peers, and that's really because of some of the problems it has experienced with its UK bank. But if we do see that release of capital, if we do see those UK problems disappearing through a sale at a pretty good price, well, the market, I think, will like that enough.
So that Port Hedon expansion has been pared back by the company at the same time that they are talking up output increases for iron ore. How to achieve both alongside one another?
I think the key differences between BHP and Rio Tinto is that Rio Tinto derives 90% of its earnings through its iron ore assets. BHP sees a much larger chunk of its profit coming from its oil and gas projects. And what we have seen in the past, in the last 12 months, is right down in terms of some of those shale gas assets. There are still some expectations that we could possibly see some write-downs there, but in terms of productions, we are expecting productions to still be quite strong. You're absolutely right that they've decreased potential capital expenditure going forward, but in terms of the assets that are currently producing, we're expecting to see a strong result there. So Wednesday we'll see BHP, but it's a big week for those iron ore miners, because on Thursday we'll also see Fortescue coming out with its production result. Oz Minerals, Panos will be out also on Thursday, and then on Friday we'll see second quarter earnings out from ResMed in that healthcare space as well. So it does look like it's going to be a pretty big week for Australian companies.
That NAB shares are online. They spike about 2% at the open on those reports of the Santander connection. Julia, Mirabella Nickel stocks off about 1% on some production numbers coming. What are you expecting?
This one's an interesting stock because recently we have seen some positive price momentum coming into the stock, and we are expecting to see the full year numbers today. If we have a look at Mirabella Nickel, this one's been in focus in 2013 because it has been identified as a potential takeover target by some brokers like JP Morgan. I guess the attractiveness of Mirabella Nickel comes from its nickel sulfate mine. Its primary asset is the 100% owned Santa Rita project, and if we have a look at this project, it has one of the longest mine lives. Its reserves really support a mine life of more than 19 years. Now, it has been a difficult 52 weeks for Mirabella Nickel. Back in May last year, we saw a $114 million capital raising. We have a look at the first half result where we did see a loss there, but what we have seen is a ramp up in terms of its operations, and the operational issues that it's been faced with has been well flagged as well. In terms of the full year, because of the loss that we saw in the first half, we are expecting to see a loss of about $100 million. But this Mirabella story is a story about this year, and in 2013 we are expecting it to return to profitability, and we're slowly starting to see a re-rating in the stock. So potential takeover targets, starting to see a potential re-rating in the stock because we are expecting to see a profit and a return to profitability in the current financial year. But for FY12, which it's reporting on, we are expecting to see a loss of about $100 million.